Hello everyone, we are here to discuss about dollar index today. So what is dollar index? Before we start, I would just like to request you to please subscribe and hit the bell icon for more updates on currencies and commodities. As shown in the chart on the screen, the dollar index is the value of the dollar against 6 major currencies. It's a weighted basket where euro has a major share. As you see on the chart, it's 57% almost, followed by JPY, Japanese yen. Then we have GBP, that is the British pound. Then we have Swedish franc and Swedish krona, and then we have Canadian dollar and basically the Switzerland. So that these are the 6 currencies which is dollar index is created on. Now we are here to discuss about basically the short-term triggers and long-term triggers for the dollar index. So what are the short-term triggers? If you talk about short-term triggers, we have seen that the Euro zone has recently published its outlook where we have the growth in the first quarter was a meager 0.1% as against almost 0% in the last fourth quarter of the year. But we have seen that some resilience as still because of the higher inflation which is coming down, still the economy is showing resilience as not going into a negative territory, and US growth has also been impacted because of the persisting inflation. Now talking about the short-term triggers, we have various central banks meeting lined up in the next week. We have the US Fed meet followed by ECB, and then we have the Bank of England meet where all the central banks are expected to hike by further 25 basis points. But the US Fed is expected to have the hike will be the last hike before it can signal a pause. But also going ahead, we expect some volatility in dollar index for the next 1 to 2 weeks, where we can still see a new yearly low in the dollar index. And going ahead, we have seen that the dollar index has been maintaining around 100.47 levels to a low, and from where it declined from around 114 levels. But it's expected to consolidate and still have a new low we can witness in the coming weeks. But what are the long-term triggers? If we talk about the long-term triggers, we have the expectations of further slowdown in the US economy, where the Bloomberg survey has also shown, which has been carried out last week, has also shown that US, most of the economists are expecting that there will be a mild recession in the next 9 to 12 months, because of which the expectations of rate cuts have been increased. And also there will be some key rate cuts expected before the end of the year, which will have an impact on the value of the dollar index. And dollar index is expected to weaken further on a long-term perspective. We are expecting 90 on a downside. We are expecting 96 to 95 levels, where the trading range would be around 95 on the downside, and on the higher side it is around 108 levels. So this is all about the dollar index. And one important last point is the de-dollarization move, which is also likely to impact the long-term value of the dollar, where many developing countries are going to have a trade in their own currency. So this is all about the long-term triggers, and we are going to have more updates on currencies and commodities in our further videos. Thank you and have a good day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.